the fallacy of a strong dollar is that it's not real. And it's really actually not just a thesis. The reason why we have to shift from one current currency regime to the next current currency regime is because there's virtually officially no purchasing power left in the currencies. That's also one reason why we're seeing more rapid inflation. And interest rates have been anchored at zero. That's the key tool to regulate the rate and speed of inflation. And it's been anchored there since 2008. So now they're trying to raise the rates so that they can lower them into what? The next crisis that they're creating? And what are they going to do? Are they just going to keep printing money? And then that makes everything okay? Because it doesn't. It loses every time a central banker prints that money, the money that's already in existence loses value. A rising gold price is an indication of a failing currency. Central banks, governments do not want you to know that that currency is failing, right? That's number one. Number two, what you're referring to is the spot gold market, which is simply a contract that, I mean, there are different sizes of contracts, but here in the US, $145 controls 500 ounces of physical gold. So a lot of leverage is used. And actually, before they changed with netting and compression and all these garbage accounting tricks, I went in, and the Bank for International Settlements, which is the central banker's central bank, tracks global derivatives. Before they changed the accounting tool, I saw it with my own eyes. 62,000 ounces of derivative gold, which is gold that does not nor ever will exist, for every 1 ounce of physical gold. So if magically there were an extra 62,000, 62 trillion thousand, I mean, who knows really how many of these contracts are out there? Could that suppress the visible price that you see? Yeah. Of course. In the lower collectible physical gold market, as well as the higher physical gold market, and just the regular kind of more bullion market, there are tremendous premiums that are being paid for the physical while the spot price is dropping. I saw the same exact thing happen in 2008. The spot price was dropping like crazy, but the physical market was making new all-time highs then. Okay, so yeah, you're looking and trusting that what Wall Street is telling you something is worth, and you're believing it, which is exactly the intent, right? Because every single thing in the market is now been turned into a financial product. Real estate, I mean, do you flip real estate on a day-to-day basis? Do you check the price of it on a day-to-day basis? No, you have a house and you live in it, right? But that's been turned into that kind of product, as has gold, everything has. That's the whole financialization of the world. It's been turned into a big derivative, which is just a leveraged bet based upon the price action of the underlying stock or bond or weather or credit or what have you. They can make derivatives out of everything. Understand history and also understand how to determine what the true value, that true fundamental value of any asset or any instrument is. Because that's really the only way for you to know, is something overvalued, fairly valued, or undervalued. Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? But people get caught up in the euphoria. So with gold, which actually is a pretty simple method, right? And you don't have to get to the penny. We're just trying to get you close, right? Gold is good money. It's been good money for 6,000 years. The stuff that they create, whether it's digital or printed, okay, this is the flip side of the same coin, right? So how do you know what gold is really worth if you can't look at Wall Street or the spot market and go, oh, gold is worth this? Okay. Well, how is this created? This is created by creating debt. So you take all the debt that's been created. On the other flip side of that, there's a finite amount of anything physical. So there's a finite amount of gold, whether it's in the ground or it's above ground, because gold is indestructible. So we can account for like 98% of all the gold that's ever been mined. So you take all the debt and you divide it by all the gold, and then that tells you roughly the true fundamental value of an ounce of gold, which is somewhere at the moment, somewhere north of $15,000. Okay, now, here's the thing. Until the central banks are actually ready to regain your confidence. So first, there's going to be an absolute loss of all confidence, and we will go into, a hyperinflationary depression. That's what I think lies in I think it's already started, actually. Then, once all confidence in the central bankers and the current government regime has gone, we'll be in hyperinflation. When they are ready to get it back, then they revalue, they take this, which has no intrinsic value at all, and they revalue it against that. And that is when we will see gold go somewhere near and probably surpass its fundamental value in terms of, in this country, dollars, but they could be in terms of euros, in terms of yen, whatever the fiat currency is, because they're all debt-based, they're all government-backed, right? People want to believe when they come up with something new that that's going to save them because they're in so much distress. But I don't know how many they're going to ultimately do in Venezuela, but I can tell you that the first one, and it's gone up since then, but the first one was 3,500 times overnight. Because the currency was devalued like 99.5%. So that is when you will see the true fundamental value. So don't get disheartened. Just know that what you're accumulating is a severely undervalued asset. And Wall Street is not the one that's going to tell you what the fundamental value is. That will be the government and the central banks when they do their first overnight reset, and probably their second, lopping off zeros, et cetera, as we've seen in Zimbabwe and many other countries.